Hey out there, welcome welcome to another edition of Market Takes. There's a lot going on this week, but here on Market Takes, we're going to tell you the three most important things that you need to be watching out for this week. One of them is the big inflation report we've got coming out on Thursday, the CPI, Consumer Price Index. Economists are expecting that to rise, or inflation to pick up, increase from the previous month for the first time in about 13, going on a little more than a year, a little over 13 months. That could be big, and we are going to talk about how the market could react. We've also got some big earnings reports from the likes of Disney and UPS, a number of other companies. We're going to tell you which ones to hone in for and what to look for in those reports. And of course, you may not have known this, but the New York Fed household and consumer debt report is out this week, as well as the U.S. Consumer Credit Report. That's out a little later today. I'll tell you what to look for and why those will be important for the market, for investors, but also for you and I regular folks out there. So let's talk about it. Listen, first report I want to talk about is the CPI, Consumer Price Index, that inflation report that's coming out on Thursday. I want to throw something up here on your screen just to give you an idea of what we've been seeing. So as you see, this chart goes back to the beginning of 2022, and you see inflation just steadily rising and peaking in that 9% area right in June. That was the highest inflation had been in around 40 years, a little more than 40 years. June, 9.1% year over year inflation. And so compared to the previous year, we have seen inflation come down every single month since then into June. And so now for that July report, economists surveyed by Dow Jones are expecting inflation to actually have increased to 3.3%. Now, this is important because it's going to counteract if inflation does behave as expected, it's going to counter and move differently than what we have seen for over a year. And that could be a big shakeup or a big surprise for the market. Now, like I said, this is priced in. Economists expect 3.3% inflation. And remember, we're now comparing to lower numbers than what we were in June. So that could be one reason why inflation picks up. It may not be a big reason for concern or worry, but you're going to want to look inside the details of the report. Now, is this about goods or services? We've seen goods prices kind of consistently falling and services prices picking up. How much does that happen and how much does that continue? But we are expecting to see a change in this pattern that we have seen for a number of months, and it's going to be a question of how the market deals with that. But this chart here just illustrating the way that inflation has behaved over the past year, and economists are expecting that we will see that kind of reverse and inflation pick back up. How much it picks up, why it picks up, what moves it higher, and why are going to be closely watched. You're going to want to tune into Market Takes. We will be right here, 10 a.m. Eastern on Thursday morning to break all that down for you and talk about how it relates to the Federal Reserve and what they're planning and what they're going to do going forward through the rest of the year. The Fed really is data dependent now. The data is going to drive their decisions, so we will see how that report really impacts and influences that, and it's going to be all about the details in that report, and we'll break all that down with you. Like I said, Thursday morning, 10 a.m. right here on Market Takes. How will the market react? We're going to find out, and we're going to talk through that together. What we talk about next, let's talk about earnings. UPS and Disney are the big ones that are coming out this week, and they will be out a little bit later, coming on Tuesday and Wednesday. So you're going to want to watch for those out this week. We also get earnings reports from Alibaba. I think you'll want to watch that because there has been this big story about the slowdown in the Chinese economy, and I think those Alibaba earnings reports, because that's a company that has to report earnings, they are required to put those numbers out, and we will really get a real deal look inside what's happening in China from one of its biggest companies. We'll get those reports. Also, we get Lyft, Fox, BuzzFeed, Coinbase, Palantir, some others, but I really think UPS and Disney are the two you're going to want to watch for. Those are a couple companies that have really, their stocks have underperformed year to date and over the past year. UPS is up only 3% year to date compared to the 17% gain in the overall S&P 500. Over the past 1 year period, it's down 8% compared with an 8% rise in the S&P 500. That really has resulted from, again, this slowdown in goods that we've talked about. Folks aren't buying as much, they're not going as much through UPS, but there are also a number of other issues for UPS. We saw just today the company Yellow, one of the largest trucking companies in the U.S. In fact, I think the largest trucking company, applied for or filed for bankruptcy protection today. We have seen FedEx had weak earnings. So these numbers from UPS are going to be very highly watched considering where we are right now in the economy. It's going to tell us about online shipping. It's going to tell us how those lower fuel prices, if that contributed to UPS's bottom line, affected growth, summer travel, all of those things UPS is going to tell us a lot about. Another company you're going to want to watch, Disney, down 3% year to date and down 21% over the past 1 year. those are going to be watched not only for those Disney Plus numbers, but you're also going to want to watch as we think about how much Americans are traveling. Are they going back to theme parks, Disneyland, Disney World, all those resorts that Disney owns, things like that? How much has Disney been able to benefit from this big pickup in travel that we have seen? We hear that Americans are spending, they're going out there very confident, they're spending their money. Well, is Disney able to benefit from that? And are they attracting those people? Is the economy still behaving as it was? Those earnings reports are going to tell us a lot about how much they've bounced back or not. So we'll see. You're going to want to watch those. Disney and UPS this week, I think, going to tell us a lot about the economy. Last but not least, the U.S. Consumer Credit Report is out Monday afternoon. That's today at 3 p.m. Check that out. We've seen continually rising credit, as in more folks in the U.S. taking out debt credit, but we have seen it rising more slowly. And month over month, we've actually seen a significant deceleration in terms of credit. I think that may have a lot to do not so much with the demand side as in people wanting credit. It seems like folks still want credit. They still need to borrow a lot of that money because we are seeing credit card balances at an all-time high. But what we are seeing is, companies, banks saying we're not giving out as much credit. We've seen we'll also get the New York Fed household survey. That's a quarterly report. Last time it showed all-time high record credit card debt. So we get both of those. But I want to throw a chart up here on your screen that I think illustrates and really talks about and shows what we're seeing and why I want you to watch out for these reports. Now, this is the latest Fed Senior Loan Officer Opinion Survey, the SLOOS report for us cool kids out there. And what you see there is consistently, as we get to levels of the number of banks saying they're raising their standards for giving out credit or raising their standards for making loans, you see a recession because banks start to get nervous. They think, oh man, people aren't going to pay this back. We've got to start tightening up and making sure we only give credit to the most worthy borrowers. Well, what you see there on the right of your screen is an unusual trend. We've seen it kind of pick up and that number stay high, but not reach those 75% levels like we saw in the 2008 global financial crisis and the Great Recession, and even in 2020 in COVID. Unusual for what you see. Usually you see it pick up and then come back down as banks start to that worry starts to ease. What you're seeing is it's staying high, and that's unusual. And really, this chart just illustrates the unusual credit environment that we've seen where banks really are just raising those standards, keeping it high, and they're actually turning a lot of folks away. We saw a report actually out from the New York Fed just last week showing that credit was the hardest to get in years with fewer people seeking out loans. A lot of them reporting that, hey, you know what? I just don't think I'll get it. I don't think the bank will give it to me, so I'm not even going to bother to look for it. Important to watch what's happening at banks and what's happening with credit and whether folks are able to get the credit they want and that they feel they need. So that's what you're going to want to watch out for this week, because I think that's going to tell you a big thing about, or a lot about, what's going to happen in the future rather than what's happening now. Hey, listen, that's going to do it for us here on Market Takes. I'm your host, Dion Rabouin, reporter at the Wall Street Journal. Thanks so much for tuning in, and I hope you'll be with us next time.